All right, today, Travis, we're looking at market themes heading into 2026. What's changed over the last year and where opportunities and risks might lie. So let's start big. Let's start with the economy and rates.
Well, everything starts with interest rates, right?
Yeah,
that's what
really
we always
does.
say. So
Yeah.
heading into 2026, I think the central question is how sticky is inflation going to be, right? And where do rates settle here in 2026? There's a lot of speculation on Fed cuts and so forth. But if you think about it, even if inflation is coming down, the bigger shift is that markets may be moving into a world of higher for longer type interest rate environment, right? Especially relative to where we were.
I think you're right.
And that's, compared to the last decade. And that matters because it changes the math on everything, right? If you start with interest rates, it changes the math on equity valuations. It changes cap rates, so that changes real estate valuations, private credit, and even how people think about cash, because there's a lot of people that have been camping out in cash, T-bill and chill. But that world's coming to an end as inflation and interest rates converge there. So.
Yeah, and so one key theme investors may need to relearn to live is with yield. Mm-hmm. For years, cash didn't pay, and now it does, and that creates a real competition for those risk assets that everybody had to go into because cash didn't pay.
Yeah, and once inflation and short-term interest rates meet, people will start looking to push out those risk assets as well. But on the flip side, if rates stabilize or even drift lower from here, it could be a tailwind for parts of the market that have been sensitive to financing costs. Small caps are an example here.
Yeah, and this next theme, Travis is no stranger to us. Let's hit on this theme of everybody talking about AI.
So rates and AI, we haven't said anything about those this past year.
Not all year. The story for 2026 becomes, though, less about the hype, we think, and more about real-world productivity. Mm-hmm. The early winners were the semiconductors, cloud infrastructure, and then those data centers.
Yeah, and heading into 2026, we could see the next phase here, or eventually we're going to see the next phase, and that's AI spreading into other industries like how can healthcare use it? How does it help financial services? How does it help logistics, getting goods from here to there? And how does it help with manufacturing, right? Making the goods. And investors are going to start asking, okay, who's taking this technology and who's actually improving margins? Who's using it effectively here? And not just talking about, hey, we're implementing it and using it as a point on earnings calls, right? Yeah.
That is the key. Markets will likely reward companies that can show the measurable efficiency gains, and the market's going to punish those that are making those big AI claims with zero impact or no impact.
We kind of saw that volatility in the last earnings season. You got punished, or you get rewarded if you can actually show you're using it effectively. But if you step back, Steve, and you think about this theme, AI is no longer a story, right? It's going to become a scoreboard. Like, you say you're doing it, how are you using it? Show me the results.
Yeah. So our third theme, another big theme, is earnings growth and whether or not rally broadens beyond a handful of those mega caps like we've been seeing over the years of just 10 stocks pushing the entire market.
And we've seen periods of that, where market concentration or a small group of stocks carry the market. You and I have been in this business long enough. We lived through a couple of those periods. And what do we know? That can work until it doesn't work anymore, right?
And you get punished dearly for that.
Yeah, and heading into 2026, the key question is going to be whether small caps, cyclicals, can get a better environment. And so we'd be looking at things like, okay, maybe there's some easier financial conditions for those companies to finance. Maybe they get some steadier growth opportunities here, and a more normal earnings cycle. If they get that, then you could see those valuations push up and maybe some broadening in returns.
Yeah, Travis, and if the economy stays resilient, you could see strength from areas that have lagged, which is industrials, parts of financials, and select consumer sectors.
Staples.
Yeah, the staples. And so, but this isn't going to be automatic. Many companies still need to prove they can grow earnings in a world where capital, as we've talked about, isn't free anymore.
Yeah, you're going to have to pay financing costs, right? And investors will be on the other side of that. So, Not my favorite, but we're always going to have to talk about geopolitics here,
Yes.
Steve. So let's dig into that because it's going to
Playing a
shape
role.
how capital flows around the world. Yeah.
Yep. Yeah, and so you see supply chains. If supply chains can be resilient in domestic manufacturing, you have energy security. These aren't one-year trends.
No,
right?
it takes a while to reshape that.
Yeah, and heading into 2026, we're likely still in an environment where you have defense, infrastructure, and strategic commodities still remaining relevant.
Yeah.
So
Thinking about the geopolitical events that have unfolded here recently. Yeah. Defense, infrastructure, supply chain,
commodity oil.
Yeah. So, but all of this, Steve, like if you think about it, it does tie back to inflation. In a world that's going to prioritize resilience in those areas you're talking about, energy production, supply chains, things, over efficiency. Hey, how do I get it done as cheap as possible? That's going to lead to structurally higher costs, right? And investors need to factor that into their long-term assumptions in their portfolios. So.
Yeah, Travis, in other words, we call this globalization. And it's not dead, but it is changing as we've seen, and portfolios really need to reflect that as they move forward.
That onshoring trend that we're seeing, yeah.
So, and then our final theme, which is one of the biggest shifts for investors, and that is fixed income is back as a real asset class, not just a placeholder anymore.
Yeah, we've been saying that for a while. We definitely said at the beginning of last year, and bonds performed well this year. And it's powerful because it lets investors build portfolios with some ingredients that they like, right? You get some real yield, right, in bonds. You get some lower volatility. I've never met anyone who says I don't like lower volatility if you can get it for me.
That's right.
And you get some more balance in those portfolios. And that is helpful, especially for those people who, in those zero interest rate environment that we came out of, they were forced maybe into equities or forced into more riskier assets than maybe they should have been, chasing a return. We can get you some real yield. We can get you some lower volatility and some balance here moving forward. So it's a good thing.
It is. Yeah. There's no question. So heading into 2026, Travis, we are thinking, quality matters, right? I mean,
it always does.
And it does. And if it goes away for a little bit, it always rears its ugly head back up again. Yeah. It'll come back. Whether it's bonds or stocks, investors may be rewarded for focusing on strong balance sheets again, steady cash flow, and pricing power. All of those are extremely important.
Yeah.
And when you analyze stocks, you're looking for all of that.
Yeah, well, especially in today's environment, when you talk about the top-heavy market, if the momentum moves the other way, and you see those darlings of the market start to get punished, people are going to start looking for what? Strong balance sheets, steady cash flow, pricing power, right? That's where the money's going to flow because they want those safe assets. And it's not a flashy story, Steve. But it's a durable one. Yeah, over time.
And you like that a lot.
Yeah.
When you build portfolios. Yeah. So to sum it up, Travis, heading into 2026, the big themes are where do rates settle?
Yeah.
Does AI turn into productivity? Everybody's looking for that in 2026. Is there going to be broader earnings growth across the market? And is it going to just go back to those 10 stocks? Right. Geopolitics driving real investments moving forward, and fixed income re-entering the picture really in a major way that it's been a while since we've seen.
Yeah, and I think step back and, what's our biggest takeaway from all of this we talked about today? We're in a market environment that's going to reward discipline here. I mean, the goal, again, is not to chase every headline you see on CNBC or in the Wall Street Journal. It's to build a portfolio that can do what? Handle multiple outcomes, because we don't know for sure what's going to happen in 1 year's time, right? So build a portfolio that can handle multiple outcomes, because the only way to let compounding do its work and experience the magic of it is to survive and be around long enough to do that, right?
That's exactly right. And we'll keep tracking the key indicators such as inflation trends, earnings revisions, credit conditions, and the real adoption curve of AI and what that looks like.
Yeah, I'm excited to see what the future holds.
I am too, Travis. This has been great. I look forward to it next week.
Look forward to it as well.
You bet.